Good morning, everybody, or good afternoon. Rob's going to get started like he usually does. He had a good information there on those cryptos and what to look for if they start to bottom out. I was just in a trade here that I'm just closing out, and I'll let Rob to get started. There we go. Just got filled. Okay, Rob, go ahead.
All right, thank you, Frank. Good afternoon, everyone. Welcome to another one of our Wednesday webinars. I am Rob, or Stock Darts, and that was Frank, who is also known as Stock Guy 22 on the internet. And you could find us on a couple of different venues. Most of my content, most of my trading ideas are on patreon.com/stockdarts. That's where I like to post a lot of stuff. It's sort of one of these sites that has different tiers of subscription, so you could. I have free content on there, but I also have paid content. That's usually where I put some of my trade ideas. Every now and then I'll put some stuff for free, but a lot of the good stuff is on there for $8 a month, which I think is basically a trivial amount of money for anyone that's looking for trade ideas. It's just a way to sort of filter out and make sure that I get people that are serious about it. Thank you, Denise. I'm glad you brought me someone else. That's awesome. I love that. Wow, good job. I hadn't noticed that today yet. But yeah, so if anyone is interested in that, we're pumping out great trades. The market's been a little bit rough these last 2 or 3 days, but we've still found a couple of trades that are working in our favor. And overall, I'm trying my best to give you guys good content that you really can't find anywhere else. And more than anything, trying to build up a community that we can, do sort of forge on ahead together and see if we could get better and find better trades that way. You can find Frank on Twitter at StockGuy22, same as myself at StockDarts. He's also still sort of finishing up the touches on the new StockGuy22.com. That should come out pretty soon, and you can find videos for both of us on YouTube as well. Other than that, let's go ahead and get started. The market, as I mentioned, is having kind of a rough day today. Rough start to the week as well, and then yesterday there was sort of an in-between. Oh, okay, Ron. Okay, yes. Good job, Denise. Thank you. I appreciate that. Yeah, I've had a couple conversations with Ron already as well. Now, I want to thank you guys, Ron, Denise, those of you that have joined. I really appreciate it. Like as I said before, it's nice to have support. It sort of spurs me to come up with more trade ideas. I think sometimes, even as a successful trader, sometimes you get kind of lazy and you get kind of caught in your routine. And doing something like this and sort of putting my trades up in a public arena where I'm more accountable for them has started to get me to again start focusing on really looking for really good trades, and even just looking for more trades just to make sure that I give you guys some stuff. There are times where I'll have a trade on and I'll get lazy and I won't look for a new trade during the day, but having something like that Patreon site where I sort of force myself to look for trades for you guys, it's actually giving me a good sort of a good month as well, because I'm finding more trades for myself to take. So I appreciate the support, and it's a mutual benefit thing, right? The more guys or more patrons I get, the more ideas I'm motivated to look for, and hopefully that's a cycle that keeps building up, and I keep coming up with more stuff for you guys. Denise, we'll take a look at CGC again today, since you just mentioned that it popped today. We'll look at that when we get to the chart requests. We're going to do the usual, right? We're going to look at the S&P 500, the Dow Jones, the NASDAQ, and the Russell. And then once we finish that, we'll look at the U.S. dollar, which has had a pretty big move against the euro. And then gold, silver, which have had pretty big drops. And once we look at that in oil, we'll get to the chart requests. So if anyone else has a chart they want to discuss or bring up, go ahead and put it in the chat. That way I have an idea of how much time we need to allot to that. Other than that, let's look at the S&P 500. As I just mentioned, we're having a little bit of a rough day today. We have had a nice bounce. You can see we're starting to print a hammer. It's very early in the day. I wouldn't put too much faith in the hammer yet. We'll see what happens. But I think what we're seeing now in the middle of the day, yesterday, the day before, is that we are at a crossroads in the market, right? There's some conflicting trends starting to come into play here. We are still long-term are still pretty bullish, and the intermediate term, which I'll define the intermediate term as far as this discussion is concerned with this move from April to August. We have a nice uptrend in the intermediate term, and in the long term, of course, we take a look at a weekly chart. Obviously, the trend is very clearly up, maybe sort of sideways this year, but overall, longer term, it's still pretty much up. right? So there's a lot of buyers that are still ready to buy anything. Anytime the market drops a bit, they're ready to go ahead and buy, right? However, in the very short term, we started to see a little bit of selling pressure come in as we approached all-time highs on the S&P 500, and so we've got a little bit of a pullback here, which is expected and healthy. You can't just keep climbing up forever without having any kind of selling days in order to have shares exchanged to new buyers that are willing to hold it through the new highs. And where we are right now is at a point where we probably needed to correct a bit, but there's still a lot of buyers that keep stepping in. So we had a sell-off last week to close the week, and then we started the week pretty poorly. But then yesterday there was a big surge of buying as we approached this green trend line, the 20-period moving average, and that was quickly sold off today on a gap down, right? However, again, middle of the day, and we go to 5-minute chart, you can see we've had a nice bounce. Looks like maybe even tried to bottom for the day and starting to try to make our way back up into that gap. Not sure if we have enough steam to make it all the way up there, but we'll see what happens into the afternoon. But I think that the more important thing to take from this is there are still plenty of buyers. This is, despite what you might read on Twitter or what you see on CNN, this is not some sort of a major sell-off. This is not something, this isn't something where traders need to panic or where there's an impending bear market or anything of that nature. And you might not always see that. Sometimes I was watching Twitter today and I'm watching these discussions about panicking and about blood or this carnage, and it's like that's not what's going on here. This is just a typical run-of-the-mill 2 or 3 day sell-off at the moment. Now it could turn into more, but even if it turns into more, we're just pulling into more support zones and into other areas where you should be buying dips or looking at buying dips or buying value plays, not where you should be liquidating your holdings and sort of digging into your bunkers for a big bear market. I don't think we're there yet. I think this is a discussion that we've been having for couple years now, where traders are continuing to say, well, we can't keep going up forever. We're about to top out. We're about to roll over. And I feel like I've been a strong advocate of continuing to believe in this bull market, and I'm going to be until I really see a lot of signs saying that the bull market is starting to really erode or slow down. And again, I don't think we're there yet. Now, I will say this: in the intermediate term, it does look like we are starting to reach what could be sort of another tapering off point where we need to correct for a few months. And the reason I say that is, again, if we just go ahead and draw a big box to sort of highlight the action for this year, and you can see that we're pretty much at the top of it. Now, we could be building up to break outside of it, and matter of fact, that's what we've done on IWM and the Qs. So there's always the chance that the S&P 500 follows suit and tries to break out. However, more often than not, if you could draw a clean box like this, it makes sense to buy the bottom of the box and sell the top of the box, which is, interestingly enough, almost the exact opposite impulse that most traders have. Most traders refuse to buy down here, and they refuse to sell. Matter of fact, they're buying up here. And yes, every now and then that works out and you get a nice momentum buy. But more often than not, what ends up happening is you buy up here, and then you have to sit there and watch it drop, sometimes all the way back to the bottom. Sometimes just what's happening right now, where you sort of sell back into an area like this, in which case at this point it just builds up steam to try to continue to break out higher, right? And if that's the case, then that might be where we are right now, where we could start looking at a possible area to buy to try to make a move back to the highs. And that could be what's going to happen right now. Is we're still in the process of reacting to reaching a ceiling, right? And this often forms a flag or a pennant, which can then be traded back to the upside, and then maybe even to new highs. And that looks to be what's happening right now, right? If we just go ahead and drill down, we just had a break of a pretty critical level, this 280 level. We came up, just peaked above it, came back, retested, broke out, retested, broke out again. Now, the one thing I'm not a fan of is typically it doesn't take 3 retests of a level to prove that it's confirmed. At least not in this short of a time frame, right? Because we had that one quick retest, a second retest, and now we're working on a third retest. So again, I think showing more than anything that we are at a crossroads and there is potential for a move in either direction. And for those of you that are on my Patreon site or that visit it, and again, I posted it as a free article yesterday. I think it was yesterday or Monday, I can't remember, but I posted this, actually it was Monday, I posted this idea of looking for charts that have sort of dual threats or dual purpose. And the reason I was doing that is because I think that we're in a market right now where there is still a strong potential for just a breakout and a move higher. But there's also a chance that we enter a little bit of a longer correction and then pull back into further support levels. And so what I did was I looked for charts that actually give you the possibility of taking either one of those plays. If the market sort of picks up and breaks out, then those charts were setting up nice consolidation ranges. But if the market did pull back further, those charts were in a place where a further pullback would still leave it in a technically sound place, and a place where you could still look at a possible play to the upside. And for those that didn't look at it, this was one of the examples I put was CDW, right? And you can see CDW tried to break out yesterday, and it's sort of faltering and pulling back a bit today. But this one is one of those ideas where you can see it's printing a nice tight pattern, pretty close to highs. And if the market reacts really well over the next couple of days, this thing should come back up and start testing 88 and beyond. However, if we do get into a little bit more of a protracted sell-off or correction, well, there's a nice buying area down here at 80 or even a little bit below, depending on how that correction takes place. And so this is one of those charts that has a couple of different ways that we could play it depending on how the market behaves. And, you know, it's one of the things that one of these concepts that I like to push out. It's something that I came up on my own. It's not something you're going to read in a book or find on someone else's website, but it's the kind of things that I like to give you guys, just different approaches that could open up your eyes to different ways to trade the market. And that's one thing that we should be doing now, and that's, I think, the key to why we have these Wednesday webinars and why I focus so much on the markets. I think I could probably say most of us don't trade SPY, right, or the Qs or IWM or the Dow Jones DIA. So why do I spend so much time on this? Well, because most charts and most stocks follow and mimic what the market's doing, right? And they're going to do similar things, and they're going to react to what the market does. So if we understand what the market does, we understand what environment we're in, we can figure out what kinds of trades we're looking for. And as I said, I think we're in a spot right now. It's not that easy to say, well, we're going up or we're going down. And so what we want to do is we want to find charts that provide us with scenarios depending with a scenario, basically with a trade, regardless of what scenario plays out here, whether we correct a little bit further and come back into this channel, or whether we have just pulled back and retested and are ready to start breaking out of this little descending wedge that we're seeing and start retesting highs. And so that was sort of my focus on Monday, was looking for trades or looking for ideas that would benefit on a quick breakout or on a little bit of a further pullback to a better support level. And I found 3 or 4, and a couple of them are actually still doing pretty well and holding up, despite the fact that we did sell off a little over 1% to start the day. And I think that's one of the things we need to do, right, is take a look at what's going on here and try to really analyze why or what the market's doing and why stocks are going to be doing the things that they're doing. Thank you, David. I'm glad you do. I'm hoping that one of the things I like with this Wednesday is I'm hoping to be able to give other people, sort of introduce them to this idea of analyzing the markets in order to find trades that match that market, right? That's something I'm a big proponent of. So I'm glad you enjoy it. So 280, very clear level, as I mentioned, and a nice support level. Until we break 280, we can assume that that's going to be support. The 50-period moving average, which is the green one, coming right up to meet price. And as we've mentioned several times, often what happens when you break the 20 and the 50 is you sort of wedge yourself between the two and eventually try to resolve back to the upside. Because of that, I think that we may spend a few more days trying to pick up momentum and retesting this 280 before we really challenge that 50 and then go ahead and move forward and then try to get back. And I still think the resolution in the long term is probably to the upside. However, if we have indeed hit the highs for now and are going to continue to fill out this sort of big box range, then at some point we might lose the 50 and start coming back and retesting this channel and then possibly below it. But I don't think that we're there yet. I don't think there's enough negativity in the markets or positivity to push us down. It's kind of funny the way that works with the extremes, but if we have too much positivity, then we'll probably continue to sell off, but I don't think we're in that situation, and I don't think that there's enough negativity as well to really push us below that. So I think we're at this really interesting spot where the market is almost in a neutral stance and is just trying to figure out if more buyers are going to step up and push us a little bit higher, or if we've indeed found enough sellers to sort of switch around and start really digging in for buyers. And so my initial stance right now, again, is a simple one. I'm going to wait to see if we find support here at 280. If we do, then we should continue to push higher, and then most of those charts that I pointed out on Monday and Tuesday are going to resolve to the upside. If we fail at 280, then I'm going to be looking at this channel here as an ideal place to start looking at buying value plays, and I would hope that those charts that I pointed out are going to be sort of coming down to their value spots as well, at which point it's going to make for a nice buy the dip. And ultimately, if we do fail this channel, which I don't think is going to happen from here to next week, or even from here probably till the end of the month, then we probably come down to the 200 period and possibly down to 270, and that would really be what I would consider an extreme move based off of what I'm seeing in the market right now. So for now, I'm really just focused on 280, and if we lose 280, then just the area slightly below there. Not really much more. But again, sometimes if selling really picks up, and again, if we turn down and close at lows, there's a decent chance that we take another big day down and test this channel. And then once we get to this channel, I really would expect that to be an area where I'd focus on looking to buy. But again, I'd want to see support first. I'd want to see hammer candles. I'd want to see candles showing that buyers are stepping in before I'd go ahead and get involved in it. And so that's I think the two more likely scenarios is either we hold up at 280 or we come down and test this channel. And then the less likely scenario is that we just rally today and then break out. I think that a breakout to highs is still a few days away at the very least. I think that we still need a few more days to really test this 280 and to see if we need to test the 50 pair moving average. All right, now we take a look at the NASDAQ. And again, I think the NASDAQ's painting a little bit of a different picture. Now, in the short term, it's the same thing, but you can see we don't have that big box, right? We've already broken out of the big box on the NASDAQ, and we're in the process of establishing a new box, right? And again, these boxes, I know I try to keep it a simplistic term, and I'll just say, oh, we're in a big box, right? But this box is a picture of what the market or what traders envision the Qs being worth, right? Back here, the idea or the sentiment was that 150 is a great price for the Qs, 175 is overpriced, right? That was basically what this box entails, right? It's this sort of picture of trader attitudes, and that trader attitude has changed now. Now they consider 175 to be a pretty good deal, and then it's this 180 to 190 is where they start saying, "Oh, that's overpriced," right? Anything above 180 is starting to get a little, that's starting to approach 190, 200. I don't want the Qs isn't worth that, and so that's what these boxes give us. Is it's a picture of what traders think of the value of a particular equity, and what we're seeing here is that they're establishing a new idea of what the value of the Qs is that's above the previous one, and that's positive, that's bullish, and that's what you want to see in a strong market. So a little bit different in that, unlike the SPY that is still trapped inside there and facing this big ceiling of resistance, the Qs is in a little bit of a different spot where it's trying to hold above that box, and then yes, it's found more resistance, so it's still below resistance, just like the S&P 500, but it's also above a critical level that should now act as support, which is this area around probably 175 or so. Now, it could end up being all the way down here, 171, but for now, we could say somewhere in that area. Now, you'll also notice, again, the same thing. We broke the 20, and we're heading into the 50, and I think at this point, we can sort of reappropriate one of these trend lines. We could say that this is sort of an intermediate term trend line. Now, again, I think more than anything, it's the 50-pair moving average more than this trend line that's critical. But again, they're coinciding in almost the exact spots. So at this point, it's sort of a moot point. Now, we also have our previous highs that are acting as support. So you can see this actually is not that bearish or not that ugly, right? It's a pullback right into support to retest. We've got three different levels of converging support, right? You've got the 50-period moving average, you've had this trend line, and you have this horizontal level, all indicating that there should be buyers that are waiting here. So this is not that negative, and this is sort of an argument in favor of us retesting our previous level and sort of setting up for a move back to test highs again, more than a protracted sort of breakdown or an increased sell-off. Now, that's not to say we can't slice through that level. It's not like these levels haven't been broken in the past. They can be broken. So I wouldn't put total faith in it right now based off of today's candle. Again, we want to see some support here. We want to see a green candle, a strong close today, maybe a bullish engulfing tomorrow, something like that, to show that we are ready to sort of step up and retest highs. But I think this is an argument in favor of a shorter sell-off that's almost done. And if we lose that level, then yes, there's room to the downside. There's room down to 174 or 175, and then possibly all the way down to 170. Again, I think 175 would probably be the first step, and then from there see what happens. Because again, I don't think there's really enough of a catalyst here to really cause us to sell off in a major way. But I think we'll be able to tell by probably tomorrow. I think one more day, how we close today, how we open tomorrow is probably enough to give us an idea if there's really that much selling pressure. If there is that much selling pressure, we'll break through these levels today and tomorrow and start to probe lower. If we continue to stall out into tomorrow, and then that probably means that come Friday or Monday, we'll try to push back and start making our way up a little bit higher. So, again, I think the Qs, again, a little bit more bullish stance than the S&P 500. Relatively speaking, we're above some important levels, which is nice. And so this is a little bit of a different picture. Again, if we look at the SPY, yeah, there's a chance that we find some support, but you can see it's not quite as bullish a chart because there is potential and clear support levels a little bit lower than the Qs. But the Qs are looking actually a little bit bullish if we can sort of support at this zone. Now, the Dow Jones, is also, now relatively speaking, it's been weaker, right? You can see that. We're still in this intermediate channel. We haven't approached highs. And are sort of just lagging behind some of the other indices. But this is another one that is approaching some a nice convergence of support zones. We've got the 50-period moving average, which again we've already tested on the Dow Jones. We sort of tagged that today, so that shows that we are a little bit weaker on the Dow Jones. However, this white box is the year's opening range, and it's been a pretty critical price level on all four of the charts. And then we've got this green trend line, which again is a major long-term trend line. Sort of, and the Dow Jones is actually, despite its weakness in the short term, has been the chart and the index that's sort of held on to this trend the longest, and is still trying to hold on to it. And so again, this, despite what I'm seeing on the news or what I'm seeing on social media, this actually is not bearish. This is still bullish. We're just pulling into support and retesting. Now again, I don't like when we retest these levels 2, 3, 4 times in a row, because that means that traders still don't have complete faith in it and aren't really ready to start pushing in a new direction. But until they break, they're still good support levels, right? And again, we've got a nice convergence here. We've got the 200 period just below all this. So this looks like a good spot to look at buying value. Now again, I want to see some green candles before I do it, but we've got a little bit of a wedge here. Now again, this is pretty loosely formed and not one that I put a lot of stock in. But the general picture is one where we're starting to just pull back and retest, right? We had a breakout, retest, pushed up, retested higher, which is nice, but then we've had sort of negated that and have come back to retest this critical level here at 250. And if we can break past that, then we probably have a good chance of moving all the way back up to the top of this channel. So we'll keep an eye on that and see whether this can materialize in the way that it would be expected to materialize, which is a bounce here and then a move back to the top of the channel. Now again, if we fail here, it would be a sign of pretty strong selling pressure, and it would be across the board on all the indices. and there's a chance that we'd have to really dip down and start testing some lower levels. I don't think we're there, but that you be wary of it if it does occur. And then finally, the small caps. Now the small caps are not that they're actually the most bearish of the charts if we just look at them in the short term, right? We have sort of eroding price action in that we are now starting to really develop a trend of falling low or failing to reach highs quicker and quicker, right? Now, they are relatively speaking stronger in the intermediate to long term in that they've already pushed to new highs. And just like the NASDAQ, they're still building a box above the previous box, right? So this was the consolidation range we spent the first half of the year in. And now we are in the middle of another consolidation range just above it. So it's sort of a stair-stepping move. And this, again, is bullish. There's nothing wrong with this. There's nothing negative. However, in the short term, you can see we've struggled 1, 2, 3, 4 times now to try to get back to these highs. And oftentimes what happens in these big boxes, when you fail the highs enough, you need to come down and retest the bottom of that, right? So this is an argument in favor of a push down or a pullback down to new to the previous lows. Almost the mirror opposite of what we're seeing on the NASDAQ. And you can see, again, we've got the 20 and the 50 acting as potential resistance, and we've got a trend line here acting as potential resistance. So instead of 3 converging areas acting as support, we have them acting as resistance. And actually, I mean, I wouldn't put this as a 4th, but even this trend line here that we just faltered would also be. So you can see we've got this little ceiling, right, that's developing. And again, in contrast to the NASDAQ, where it's a little floor, right? So here's an index that's in favor of pulling back further, right? And I think, again, this is why we have to look at potential scenarios in 2 directions. This is why yesterday was such a strong day, Monday was a weak day, and today's a weak day, because you have conflicting sentiment across the board, right? Not just on one chart, but across several charts and across several indices. And when that happens, you're going to have traders that each day decide, oh, we're going up today. Then the next day, oh, we're going down today. Oh, we're going up today. Because there's equally sized groups that are trying to do different things. And so here's the biggest argument in favor of a continued sell-off. And if this chart wins out, then I think we head down to 164 and probably all the way down to 162. In which case, again, we would have hit probably some lower support levels on the other indices as well, which would have to follow suit a bit. And then from there, again, I still think that we're not topping out. I think that more than anything, we just are in a process of filling out some of these ranges, which is normal behavior and normal price action. And I would say the picture we're seeing right now is just, it's neutral. IWM is the weakest right now. The S&P 500 I thought is a little weak as well. Then the Dow Jones and the NASDAQ both are sort of a little bit more of a bullish picture as far as where they want to go in the next few days. But overall, I think that it's still a messy picture, right? And because of that, I'm still being really picky about what trades I like and which trades I take. And I'm making sure that I look for trades that are showing strength and showing the ability to sort of ignore what the market's doing, or at the very least sort of withstand and withhold and sort of push past it. Here's one of the trades that we were looking at, or that we took a couple of weeks ago. I tweeted it yesterday. And this one actually has been doing really well. Until today, it's finally shown a little bit of a chink in the armor today, but it actually has done a good job despite the market sort of breaking down. And then another one that I pointed yesterday, for those of you that are patrons, is actually doing very well today, right? And this was the one trade idea I posted yesterday that also should have been on the Monday post about dual purpose, but I didn't put it in there. But you can see I posted it yesterday as it was on 2620, and it's done a really good job of breaking out today. And this was another one, again, nice dual purpose. Either it breaks out of this wedge, or if it falters, it still comes back and retests a break out of this big cup, basically a cup and handle. The handle's a little bit hard to see, but this big base, and would have come back and retested. I would have been fine with that play as well, but it's doing a really good job today. And so I'm still looking for trades. I'm still taking trades, but I'm being picky about what I'm looking for. I want to make sure that there's very specific things I'm looking for and that are working and have been shown to be working in this market right now. And that's kind of where we stand, and that's what we should be really focused on, is trying to decipher what's going on here, making sure that we're not overly aggressive right now. I don't think this is a time to be overly aggressive, but I also don't think it's a time to be overly timid. A lot of times what happens when we have a market like this where you have these mixed signals where two indices are going up and two are going down is that it becomes sort of a stock picker's market where as long as you're astute about what you're looking for, and as long as you are paying attention to where money's flowing, you can still find pockets of strength despite some of the selling days. So let's see what happens. I think the big idea right now is let's see how we close out this week, and I think we'll get a better clue as to whether we have sort of already seen the correction we needed to see, or whether there is indeed more selling in the cards. And again, I think right now it's pretty much a coin flip. So I don't want to say it's favoring one side or the other. I would say that we probably still need a few more days of selling off, and then we'll see whether we're ready to push back to highs or whether we need to explore lower. All right, let's take a look at the U.S. dollar. And pretty strong. A lot of this is due to euro weakness, right? There's been some currency issues in Turkey, and that fear has spread into and basically held down the euro. And so the U.S. dollar has rocketed, particularly versus the euro more than versus other crosses. The yen has also done very well, and the Canadian dollar is kind of in the middle. But you can see the UEP index that the dollar has really ripped and has taken off, right? And again, a big function of that is that the euro has really broken down. Really just fell right below this base and is heading lower. And at this point, it's now approaching a very critical level, or is at a critical level, and actually is starting to fall below it. This is a pretty big area. I suspect that the euro stabilizes here. Again, this was a major base that it formed, and it broke out above. And again, just like the markets, start building a new base above it, right? Spend some time at the top, and as often happens, and this is where we are at the market right now, we don't know if it needs to head all the way back down or just halfway. But in the euro's case, it did come all the way back down, and it's now at the bottom of that base. And typically, this is not where you sell, this is where you buy. Now, I'm not ready to buy the euro at this point. I'd like to wait and see what happens before I go ahead and do it. Sometimes you do get shakeouts that sort of really make sure to shake out the worst hands. But this is probably an area where we would find buying. But at the moment, there's just so much selling pressure that it's really struggling. And again, I don't like to buy this candle pattern. I'd like to see something else develop. A hammer is a nice start if this can close this way, but I'd like to see a couple more days of buying pressure. And then from there, it looks like it'll get a relief bounce to at least start to establish this as the floor of a new range, or of the range that it's sort of been developing. So overall, the U.S. dollar very strong, but it may be at the tail end of that big run up. Now, if we look at it versus the Canadian, and it's sort of in the middle, right? I mean, you can see it's got this nice channel that it's been forming, and it's starting to approach the top of that channel again. But I'd say overall, overall, this is probably still bullish in that we have this range, or we have this level, right? It was this range here, and we were trying to hold above it, and you can see we didn't really hold above it. So this is a nice picture of it. Doesn't always stay in this in the new box, right? It actually came down, but it's still in the process of trying to establish 131 as a new floor. You can see we fell below it temporarily and are starting to make our way back up. If it can break out of this channel, there's a good chance it makes its way all the way back up to 133. So I'd say overall this is more neutral than what we're seeing on the euro or versus the yen, but still just in a big range and trying to establish a new one. And then finally the yen, and the yen is, thank you, Wes. The yen is in a situation right now where it is actually losing a pretty critical trend line here. So the yen is starting to gain some strength here. Now, I would say this is a hands-off because it's in the middle of a big range. It's right at a critical level, which is the middle of that range is actually, I don't have a trend line there, but it's a pretty critical level as well. But typically this is a sign that it needs to come back further, retest lower. So I would say this is a sign of yen increasing in strength versus the dollar. And normally you would short this, but because it's in the middle of a range, I think that there's a potential that it gets hung up here 110 for a while before it starts to head back lower or resume a move back up. All right, and again, some of this I think is just due to this move that's been spreading out of Turkey, right, where people are fleeing into the dollar and the yen because they're the safer currencies at the moment, and maybe they're liking the yen better than the dollar right now. But overall, the one thing that this has done is, again, continue to really, really smack gold and silver. I mentioned for a while now that once they lost these levels, I wasn't interested in buying these. Not even as swing trades. Even long-term, I'd rather wait. And you can see this is the reason why. A lot of times when you get below these major levels, the action gets worse before it gets better. Right, and that's what's happening right now. Look at in the long term, you can see where we're headed. SLV, huge breakdown, and at this point, once it does stabilize and bounce, it's just going to come right back up, and this what used to be a floor is now going to be a big time ceiling. And so overall, this didn't pan out. Right, this attempt at a breakout and a new uptrend, it didn't work. And this is going to be a while before these charts repair themselves and look better. And I'd say right now they're hands off. They're not worth it. Even as just a potential bounce back, I don't know that that's really worth it. The kind of bounce you're going to get here versus the risk that that it entails in holding these, and these often have overnight risks. So not interested in them in the least. And oil did have some weakness again, which we were kind of watching for and waiting for. Right? You can see it lost this level. This is a critical level, the $65, $66 range, and it's coming up to test the 200. The idea now is that it probably needs to come down and test 61, but it is testing the 200 period, which means it probably wants to come up and retest 66 again before it does that. But this is starting to get into more corrective mode as well. And it should head lower, but I think there's enough of a conflict of interest here with the buyers and the seller, a conflict of between buyers and sellers, that it can continue to bounce up before it goes lower. It's printing a nice, or was printing a nice channel. Nah, I wouldn't. That's probably not right. But I think that it might need to retest again before it heads lower. But this one's another one showing some weakness, and some of that stems from the U.S. dollar strength. And I think this is good. I didn't think we were ready for oil above 75 into the 80 range. Into the 60s is much better. And so hopefully it continues to drop and sort of settles into a range here as well between $75 and maybe $60. And that would be a little bit more palatable than looking at this as it was ripping up and starting to threaten a move into the 80s. Not much I can recommend as far as trading is concerned. It's in the middle of the move, and I don't think it's ready to really broadcast what it wants to do next. All right, so that out of the way, let's go ahead and take a look at some charts. First one we're going to look at is not really a chart request as much as a review of a chart request from last week, right? And so here's canopy growth, and yeah, it had a nice big gap up today. Huge volume. Must have had good news. Constellation. Also, this is what we were talking about. This is exactly what Frank mentioned. Constellation invests $4 billion in Canopy Growth. Its takeover imminent. So look at Frank broadcasting the future, right? Good job, Frank, if you're still in here. I know you've been in the middle of a trade today, but that's looking nice. Now,
Thanks, Rob. Yeah, I just finished my NQ as well. I got back in, so over 7,000 on it now.
wow,
So I
good
was
job.
5,800. So
Nice.
I got back in and thing. Yeah, I told you with that because that's what we were talking about. That they bought in, so that dip was actually nice. Where it dropped, and I don't like that it dropped. I saw it yesterday that it dropped under that trend line that you had drawn.
Yep.
Like I said, longer term, that actually made sense. It was at a good spot with that trend line. So, yeah, it worked out really nice last week.
Nice. Yeah. And then again, so it's not necessarily a fan of the way it sold off immediately after that, but I think overall it's still looking good. And for a longer term chart, we're right back to the top of that triangle, and that's nice to have that that shakeout, and then it comes right back up. And we'll see what happens from here. But yeah, nice, good job on that so far, and we'll see whether it picks up steam. But these are the kind of names that you need to weather the storm anyway, like we discussed last week, and so we'll see what happens. You think it was you were worried yesterday, thinking it was a sell the news, and you never know. It could be a sell the news event even now, right? Where it dies down from here. After all, it did gap up quite a bit, but it hasn't really pushed up higher yet. So it might still be a thing where it dies down and sort of resumes this triangle again. But at the very least, we're not at the bottom anymore. We're back at the top of the triangle, which gives it another month maybe of just dead action before it needs to again try to prove itself and make its way above it. So better place today than yesterday by a mile. And again, I'm not that encouraged by the way this thing sold off and then came back. And hammer candles at the top of ranges are usually not bullish at all because even though it shows that they've bought back up the drop, it did show there was a lot of selling in that range, right?
Well, remember what I said last week, Rob? If you remember, if you listen back to the webinar, I said if there's any other news that comes out based on what could happen with any delays for it going legal in October, there was news that came out that they said they're probably not going to be ready, which just like the government, and they said most likely it'll just be online initially, starting in October, and then they won't have the live locations till next year. So that's actually, I think, why it sold off. That was news that came out the other day. So what this STZ did, Constellation, they probably took advantage of that and just added more on that drop. And that's why probably pushed right up. So I don't know when they bought. That's usually, I didn't check the news on when they bought in on it. But that's probably what they were doing. Or that news came out and then people felt more comfortable about it. The fact that, yeah, at some point it's probably going to get bought out. If that makes sense.
Yep.
But yeah, buying on the dip, like I said on this one, and then just buying and holding is the best scenario. There was really good opportunities at each time it tested that trend line, as you can see.
Right. And even
so, I don't know if I would have bought it yesterday though. With that big drop, I would have waited another day to see if it comes back up over the trend line. So missing that is normal because just it just moved up on news more than anything.
Yeah.
But prior to that, there was good movement on that, and look, that longer term thing that you have on
there's
that.
Been a lot of opportunities. Yeah, I agree. Yesterday.
Yeah, that nice flag pattern. That's a bullish flag pattern, and buying into that trend line that you have set there is just perfect. So.
Yeah, and I agree. Yeah, I would not have bought yesterday as well. I might have bought 3 days ago. Or, I might have bought there, and then
Right, like we were talking about it last week was actually pretty nice because it was just spacing out. If you remember. So. And to me, that looked good with a stop below, but leave room to buy more in case it dipped. So, like I said, I'm like you. I wouldn't have bought yesterday either. But prior to that, a lot of good opportunity.
Yeah. Last Wednesday would have been at the time. But yeah.
Yeah, exactly.
But great job, Denise. You have another chart request. You want to look at Duluth Holdings. And all right, so on the weekly chart, this has done a pretty nice move, and it's at this point I would consider a momentum play on the weekly. It looks pretty bullish. Are you? So here's the question: are you already involved in this? Are you just trying to figure out where it can go? This entry-wise, this might be not a great spot to enter. At least not when I'm looking at it in the longer term. I would probably point this out. Now this level's a little bit more difficult, right? It's sort of like this. As far as what the price zone is, it's like about $1 range. You're in it and you're green, okay? Which you should be green, obviously. If you weren't green on this, there'd be problems, right? It would mean you bought it yesterday. This is really good. This is very nice. I think it's in the process of breaking a new level. There's really nothing negative I could say about this, other than the fact that it's up so many days in a row. It probably needs to consolidate. I wouldn't worry too much about it. At this point, I would have taken a few profits. Or, I know you're a fan of the covered calls. Yesterday is a prime example of when you want to sell covered calls. Now, I know traders look at this and go, well, why would I sell covered calls? This just broke out. But you've got 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, right? 8 are green out of the 9. And the 9th candle is a huge green, sort of like range expansion candle, right? When you get this that far into a move, that usually signals the end of the move, not the start of the. You know what I mean? Like that's not really a continuation of this move. Usually when you have this, it's sort of a blow off. You can see, looking at the last time it did that, right? 1, 2, 3, 4, 5, 6, 7, 8, 9 candles again with a big green one, right? Now, it did continue upward, but it did have a 3 or 4 day sell off before it started to make its way back up again. And the same thing here. You've got 1, 2, 3, 4, 5, 6, and then it started getting these big candles, and then immediately it kind of came back. It's been doing it for a while now, right? So this is a lot of explosive news or a lot of explosive action has come into this. And I wouldn't say close out the trade because, again, as has been proven the last few times, these big green candles just mean it needs to consolidate, not that it's ready to roll over, right? But that's good spots to sell covered calls, right? You could get this. This would have been a nice month of action. This one maybe wouldn't have panned out, but over here it would have panned out, and that might be a good thing, especially when we look at the longer term chart and where it is compared to where it was before. I think this was an explosive move. This was a sort of a price vacuum that needed to be filled, but I think it's reached a point now where this is a more critical level on this name, 26 to 28, and it's in the middle of that, right? So there is a chance that it continues to make its way higher, but I think at this point it's probably reaching a point where it needs to slow down. Let's double check and see what the earnings news, whether it's already, I'm pretty sure it already reported, but nope. So it reports in September. So was that 3 weeks ago? 1, 2, 3 weeks? Exactly 3 weeks. So that might factor into how you want to sell a covered call. If you were to sell, I don't know, I'm assuming this has weeklies. If it does, you might want to look at selling something like this one, because you're going to have some IV increase on the 17th, which might make it tough to get full profit on that. But again, I can't really say anything negative about it. I think it's doing good. It's shown the ability to continue to break out even after it sort of consolidates. But I would just say right now, the only thing I can say is that it looks overbought, and it looks like it needs time to settle in before it starts to try to push towards that 27, 28 range. So I think it makes sense to take some profits, or to maybe, just a covered call strategy, something to sort of book a little bit into this as it starts to settle down. A lot of times what happens too is when you have a run like this, it sometimes settles in and sort of waits for earnings before it makes its next move. Now, that doesn't seem like what this has been. This doesn't look like it's been interested in waiting. This has been a massive, I don't know what news came out, but something changed in the stock's outlook in June. And it's had a big move since then, and there were signs of it since before. You can see the big volume spike here as it bottomed out at 16, and it immediately surged up. And then even when it came back, there was big volume spikes showing buying. So there's been a lot of accumulation on this, and I think that's what's resulted in this explosive move. But I think that it's had such a big move that at this point we have to be looking at reining in our risk and making sure that we are not going to let our profits come back out, right? So you want to make sure that you don't let it come all the way back down and you lose 2, 3, 4 points of profit. So keep an eye on earnings, and you should be looking at how you want to get out before earnings or how you want to replace this with options into earnings, okay? And so if you have questions on that, just ask me, right? If you wanted to hold this through earnings but with options, just ask me, and we can set up maybe we can even set up a session with patrons where we look at that and how we'd go ahead and do something like that. So if you're interested, just shoot me an email or put I think you could post comments on the Patreon page and let me know. But this is the kind of thing where at this point you should be looking at winding out of this trade unless you wanted to hold it through earnings. Okay. All right.
Hey, Rob, for the days, just a few more comments because I'm all flat now on that trade. I wasn't as focused earlier. But that drop that happened, there was a report that came out on the sector and how it was expanding. So that might have hurt them a bit. But most of the drop was actually due to the drop prior to earnings.
You're talking
because they actually had a bit of a loss. But there was the conference call that they're doing today at I think it's at 12 noon today. So you might want to check the website, Denise, if you want to listen to the conference call. But I think the info is already out on it, the preliminary transcript. Yeah, I was just looking at it right now. So there's a text version of it. I can send you a copy if you want.
You said she saw the info.
Oh, she saw it already? Okay. And I think there's one today that was at 12 noon. So it's already started and done. But they were probably talking about that investment of $4 billion. Okay. And they also had a small loss, which, they've been doing well prior to that. So that was actually probably surprising. But they're growing, and they paid out those other companies that they bought out. So that's normal as well when that's happening. So, but as I said, see how important that was? Understanding that information about that company, Constellation, that owns Corona Beer. Important to know that they want to get more heavily into the industry because it affects them. In every state in the U.S. where that was added, it actually affected the sales of beer and liquor companies. So it actually makes sense for them to, if they know it's coming up, why not invest in that and at least they offset some of that. So it's actually a natural. So it's either going to be them or the pharmaceutical companies that are going to get in, right? Because it's a natural for them if it gets sold at the pharmacies at some point. Okay, so either one of the companies could invest, but you can see some of these pharmaceutical companies and the biotechs and stuff that maybe have some money aren't getting into it as fast as say the beer companies. And another beer company I read was getting involved in the sector as well. So they're probably copying what Corona there was doing, Constellation Brands. So hopefully that helped last week, but it was a bit of a roller coaster there the last few days. But again, into earnings, when you go into earnings like this, you can ask Rob. That's usually what happens. You get like these crazy moves into and past earnings. So that's actually normal. Today's gap, obviously, because of the news-related stuff, but it's higher than it was last week, higher than it was a few weeks ago. So.
Yeah. No, Denise, it was a futures trade that he was in, not CGC. She was asking if you had.
No, I didn't scalp CGC.
No, it was.
One more thing for you, Denise. You're trading in the U.S., right? You're not trading it in Canada. I forgot to mention this last week. I thought, oh, geez, I should have told her this. When Rob mentions about the U.S.-Canadian exchange, you're actually indirectly trading the U.S.-Canadian exchange. So that's why you're not getting a perfect move with the stock over time. I don't think Rob can pull up that .to chart on it. It's actually weed.to. But you can look at it on, if you want to look at it on Yahoo Finance or Google, you should be able to get a chart of it. But whenever the U.S. exchange Canadian moves a lot, you're going to find that you're actually indirectly trading that. So whenever we traded a stock, say it had to do with that Japanese one that we traded ahead of thing going public. What the heck's their name now? Can't even remember. We traded so many times. Do you remember the name of that one, Rob? The Japanese one that was the biggest investor in that shoot. I can't even remember the name. But we were indirectly trading the Japanese yen when we were doing that.
Yeah, I can't remember the name right now.
I remember that. You know which one. Sometimes you trade some of these, but that's actually important to know because you have some big moves, and you're gonna.
It was related to Alibaba, right? It was.
Yeah, to Alibaba, exactly. So there was Yahoo that was invested in it, so we were trading that, but also, hold on, I'll get it. I'll have to look at my list here. It's the one that was a big fund.
Right. I can't remember the name.
I'll remember it. Yeah, but I've traded so many times. But we're keeping that in mind, Denise. So understand, whenever you have a big move, if the stock is not up as much as it is in Canada, maybe you don't even look at that. But it's important to know that because you're indirectly trading. Whenever you trade a stock, whether it's in Canada, France, Japan, that it trades overseas, you're indirectly trading the exchange rate. And for some people, they might not understand that. They might think, oh, it's up overnight. They might look at it overnight, and then it's not up as much in the U.S. And many times it's because of the exchange rate, or it could be up more because of the exchange rate. So again, you're indirectly trading that, and I forgot to mention that last week.
Hey, here's the actual Canadian one. I did find it, Frank. All right. Let's look at Wes. You want to look at eBay and Twitter for potential swings. And thank you, Frank, for the input. See, guys, it's nice when Frank is here instead of dipping his toes in his pool, right? I know he trades better in his pool, but he gives you guys information when he's here. All right, so here's eBay. It's not been a good month for eBay, right? Let's take a look. I know they reported already, but... So it's July 18th, which is it's been a while. There you go. So this has been, and it's forming a nice little island after earnings. Let's go look at the weekly chart. And so if we looked at it on the daily, it looks like that's a nice little island. But if we look at it on the weekly chart, that's actually not a nice little island, right? Because it's actually struggling with some resistance. But if it could break out of that, then we've got potential for a move back up to about here. Right? So we've got a potential move of, well, still only 2 or 3 points. I don't know that I'm that big a fan of this one, to tell you the truth. But there is a potential bottom here, right? And if that's the case, then it could make a move. So this is what it looks like on the weekly chart, right? Now, I'm going to get rid of this trend line. I don't think it's that critical, but let's look at it again on the daily. Now that we have a framework of what it's trying to do here, and so this looked okay yesterday, like it was trying to break past that 34.50 or so, and if that was the case, it could go for a gap fill. Not so hot today, but still not necessarily terrible. I would say at this point, maybe that trend line was important. That's really what it's doing, right? It's basically this, right? And you can see it got shot down pretty good by these two trend lines that converged. It needs to, I think it needs to get back above. It needs to break these two trend lines, this horizontal level at 34.30 and the bottom of this channel that it fell below. If it does, then it can make its way back to the top of the channel, and then maybe to fill the gap. But I think this needs work before. I think this one needs to prove itself before I'd want to get involved. And the reason for that, again, is it's actually below a pretty decent or pretty important level on the long term. It's below a nice channel in the short term. It's below the 20. It's below the 50. They're all turning down. And at this point, you know, it would need to turn back before I'd go ahead and get involved. I know we were discussing earlier this idea of buying stocks at support and buying stuff that that is at value, but this is actually below value right now on a couple different pictures, and it would need to get back above it before I'd want to get involved. So I think it needs to prove itself. I think it needs to, at the very least, break this descending trend line, and then probably this horizontal one before I'd want to get involved. Okay. Now Twitter. Twitter's a little bit different. I know it had a pretty big gap down. It was doing a pretty good job. Let's get rid of these blue. These blue trend lines again were from earnings. Let's go to the weekly levels that are pretty critical. And Twitter lost a pretty critical level as well. Let's go back here. All right. First things first, the IPO range. Right? That's important. That was basically the range it spent right after the IPO, the initial idea of what traders think of Twitter and what they think its value is. Spent the first, I guess, year and a half trying to hold above it, then faltered and really just sort of fell down. Now, not that this is not a level that concerns us, but just to point out, it eventually found a base between $20 and say maybe $14, $15 that traders thought was the price of Twitter. It eventually broke out and made its way back up, and again came back to that range and did not really hold up very well, right? It did have a very big move. We were looking at it. We had this as a chart request several times, and part of it was right before it broke out to that range. It's come all the way back, and at this point, taking a long trade on this, the target would be to make its way back up to 39, not to make its way back up to 49. So that's the first thing I want to get out of the way. At this point, the fact that it failed and fell back below here means that another test, in my opinion, would be analogous to this, where it's coming up to retest it and then maybe it breaks out, but more likely than not, it starts to head back down. So that's the bigger roadmap. You can see pretty clearly what's happened, and it's come all the way back and sort of got shot down by that level again. Usually what happens when you get shot down from these levels, you try to break back in, fail, and then come back and retest the level that you broke out from. So not that excited long-term right now on what Twitter could do, but doesn't mean that it can't. All right, so here's what you're probably looking at. And again, I think that this could play for a bounce. And try to make its way back into this range and try to fill. Let's get rid of the IPO range right now and let's drill into the shorter term and work on this. Right? It already had its news. It had earnings also. All right, so we had the gap down. We had a bear flag. Often, when you have a gap down, you have a bear flag which resolves to a move to the downside. Now, the positive here on Twitter is it didn't resolve to the downside, at least not yet. Now, usually, when you get a bear flag that starts to take this long, that means that it's probably going to not break down and it's going to actually turn around and try to bounce. That's kind of what happened the last time it did this. Right? Notice the difference between that and, say, this bear flag, where it was 3 days, 4 days, and then bam, straight down, right? And then you get this 3, 4 days. It tries to go down, and then it comes right back up. Eventually, that resolves in a move to the upside, right? Same thing when a bull flag takes too long. It eventually resolves in the other direction. That's an important sense of timing that you get when you're trading, is understanding at some point, a bull flag takes too long and it ends up not being a bullish pattern, right? And it's the same thing with bear flags. And we did have, it was there 1, 2, 3, 4, 5, 6 days, and then it tried to sell off, failed, and came right back up. Now, today's candle's not that positive, But if it stays in this any longer, it means it probably resolves to the upside. So I actually do like this one better than eBay, even though I've pointed out a lot of negative things on it in the longer term. I prefer this over eBay as far as what I'm looking for. I think it's showing more signs of trying to bounce. Despite the fact that this is a bear flag, it's a bear flag that's getting a little long in the tooth and could resolve to the upside. And if it does, then we can look at a trade up to 37 and then hopefully all the way back up to 42 for a gap fill. But again, I don't think it goes past that because of what we saw in the longer term chart. Matter of fact, it probably will even have trouble filling the gap based off of what we saw in the long term chart. But I can see it holding this trend line a little bit longer and then trying to make a move. So of the two, I think this one's a little bit more actionable, and I think is setting up at least for one of these trades where you catch the sellers off guard that think this is going to make another move down, and then it sort of catches them and not necessarily has a short squeeze, but at least uses them as fuel to come up and start trying to fill this gap. But that's really all I'd be looking for in this is a gap fill. Okay. Hope that helps. And then the last one's not really a chart request as much as, well, maybe it's a little bit. It's Denise wanted to point out ACBFF, or Aurora Cannabis, and it is another over-the-counter one. I mean, I don't think it looks as good as Canopy because it broke down. And usually what happens here is you come up and retest and then fail. But these kind of names that trade off on news, they often go down and break below their base and then eventually make their way back up. I don't think this one looks as good, honestly. I know these kind of names, you're buying them and just holding them for a while. But I'm not a big fan of buying below support, even on a name like this that's just speculation. A lot of times it takes more time before it sets up a buy pattern, and I'm not sure that this is what constitutes a buy pattern for me. So yeah, my 2 cents is that from a technical perspective, this is not one I'd want to buy right now. It could end up being a value buy here, but it looks like it's going to need more work before it sets up a move anyway, unless some news comes out of left field. Okay? All right, guys. That covers it for today. I want to thank you thank all of you guys that attended. Thank you all that participated. It's always nice to get these discussions like we had last week. I think it often leads to nice opportunities in trades. For those of you that are here, again, feel free to check out my Patreon page whenever you get a chance. There is free content on there as well as paid content. But, obviously you guys like to come to these, so you like to see what I'm discussing. So if you want to look at some charts, just visit it every now and then. And a lot of times there's free content on there. Other than that, hope you guys have a good rest of today. The recording for this will be uploaded onto the Patreon as well. And we'll see each other next Wednesday.
Denise, one more thing. That stock that we were trading was actually SoftBank, SFTBY. So it traded on it traded as a OTC stock. So everybody said, "Why are you trading an OTC?" But it wasn't an OTC. It was actually a real company that had big sales, invested in a lot of companies. So we had traded it back just before the Alibaba IPO. We were trying to say, okay, how can we trade it? We can't trade Alibaba till the IPO. How can we trade it? So we traded it via Yahoo, which we did really well on. I still have, I had some Yahoo left, but not much. I had sold most of it on the pushes that we had. And then when they got bought out, I was out of the rest of it. So I didn't own that any longer on Yahoo. But on this SoftBank, it was actually a really good opportunity. Every time it dropped back, we would pick it up and then sell it on the push. So just thought I'd mention that one there. The other one for this Canopy, I sent you the link there in the main chat. I don't know if you can see it there. So weed.to is actually what it trades on the Toronto Exchange.
I pulled it up.
And the exchange. Oh, you did? Okay. Oh, I didn't know if you did, Rob. I was closing out that trade on
Yeah,
NQ, and then was looking up that SoftBank.
that's
Like, oh,
good.
I can't believe I can't remember the name, but it's been so long since you traded it. But the exchange difference, Denise, and I'll tell you where this plays a part, just so you're aware of it. Right now, it trades on the Canadian side 41 and change. Okay, but that's Canadian. On the U.S., it trades 31 and change. So what's that difference? So it's about $10 difference. Well, the difference is actually the exchange. It's about $1.31 or 76, 77, depending on how you look at it. But that's basically what the exchange rate is when Rob shows you that Canadian US. Now, it doesn't make a big difference now because it's only moving about percent or two back and forth. Okay, so it's not moving very much. But I'll tell you where it played a big part. Like back in 2008, 2009, it was about par. And at one point, the Canadian dollar was above the US. So you can end up losing like $10 on something like that if you ever had a major thing. Now, could that play a part? Of course, especially now with all the tariff issues and the NAFTA agreement. That could fluctuate Canadian US dollar very violent at any time. Okay, so that's where you got to be aware of it because of that. So I still like your play, but just be aware. A lot of people don't think about that, but it's important when you're trading a company that's based somewhere else, and in this case, in Canada, and you're trading it in U.S. dollars. You're indirectly always trading that U.S. exchange. And same thing when we were doing SoftBank, we were indirectly trading the Japanese yen. Okay, now, when it comes into a big play like that, say you're trading something like, remember when they unpegged the Swiss franc? In one day, it actually just collapsed down, and people made a pile of money, or they lost a lot of money because of that. Okay, so all the ATMs, everybody that was working there were cleaning out the ATMs to get money out, so they could buy properties in Europe, because they were going to get a big discount of 30%. And we actually know someone that actually did that, that used to be in our chat. Remember with Christian?
Yep.
Rob, he actually benefited from that because of how he's getting his money and how he'd invested. So just something like that can make such a wild thing, and it's always good to be aware of it. If you can't take fluctuations like that, and it's happened with the Canadian U.S. being different over the years, but it's very rare. Okay, I would worry about it more so now just because of the tariffs and NAFTA coming on.
Yeah. Well, the good thing
with the issues.
The good thing for them is we look at these currencies every week, so at least they'll get a heads up if something bad happens.
Yeah, and that's why you'll know about it. That's why with Rob. So, like if you look at pull up a longer term chart, Rob, if you can, on the U.S. Canadian exchange. So we did that with. I was trading Bombardier on the Canadian side, but a trader was trading it on the U.S. with me. And every time it moved, his difference was based on that exchange. And I had to explain it to him based on that. So you can actually see on a longer term play, see where it was below that dollar. That's what I was telling you, 2008 to 2010. There was a big fluctuation there. Now it's been steady into this zone up here, so it's not a big of a difference, but you can see what happened back then. So you know what some people did, Denise, that I know very well, during that 2008 to 2010, invested Canadian dollars into U.S. properties when they were down because they were getting such a good deal on the U.S. properties. They're getting the value in Canadian dollars. Now that it's gone back up, they benefited two ways. The properties went up and the exchange went up. So that's where like some more advanced stuff comes in. So you can see how, in this case, from that time period, how that played a role as well. Now, it affected a lot of stocks during that time as well. So there was the big 2009 drop in the market, 2008, 2009. All of that played a role in the differences on the Canadian U.S. Stocks, even though they were a par, that made a difference on the investment side. Hopefully that makes sense, but something to think about because a lot of traders don't think about it. I've got a unique perspective because I watch that kind of stuff, and so does Rob when he watches the U.S. Canadian exchange. And it's important to be aware that there are times where it fluctuates a lot more. Right now, it's not a big deal. You're not noticing it. You're not going to notice a 1% difference on the price of the two. But if that was going up and the exchange rate was coming down, you'd actually be losing or breaking even and not really realize why. So as a trader, when you invest in stuff like that, always important to be aware of that's a possibility. Okay, and at least you learned something new now. And I wanted to mention to you last week, and I wonder if I should send her an email. And I said, okay, if I see her in the webinar, I'll mention it to her. Okay, but nice job on that. Great profit taken, by the way. Thanks, Rob. Great webinar. And join his page, guys, if you haven't already. Really good if you're listening to the webinar outside of this webinar today. Some really good stuff that Rob is posting up there. He's spending a lot of time putting all this content together. Thanks, Rob. I really appreciate it.
Thank you, Frank. And thanks again for the input. These are nice little things that people forget about. So it's good to, hopefully we're getting Denise to learn a lot, and glad to see Denise back in the thick of things and trading with us again. But yeah, thank you, Frank. Thanks for all the extra information. And thank you again, Denise, Mike, David, those of you that are still sticking around for the participation. And yeah, we'll see each other next Wednesday, or just right now, we'll see each other in the Discord chat.